Okay, hey everybody, Sherman here. It's been quite a while since my last post, which was last year after December. Now it's February. So today is the 21st February, it's a Friday, and the time is 12:46 p.m. Singapore time. I'm planning to just work on charts, and then y'all can see how I go about studying the charts and try to find the bias. But always remember, a bias is one thing, but actually trading the bias requires uh, trade management and money management as well. Because even though we might know the price action might be getting in this direction, but look at all the difficult pullbacks, right? Even if this was coming down here, but look at all the pullbacks. So let's say you entered here, you'll still be drawn down, right? So trading the bias is not so easy, but but before we actually get into the art of trading itself, having a proper forecast is quite important. So that we'll be able to at least shoot in the right direction, right? Okay, so let's just go have a look at some of the forecasts and see what happened so far. Okay, so this one is okay. This dollar yen sell is something that I did privately, and what this is meant is premature. That's why I don't put it live. But it's just to tell myself that if price action actually breaks this trend line, I should be looking for a sell. But I have to see. We'll have to see what we actually get over on this side once the trend is broken. It's not done that, so I'll just put it on private for now. So these are some of the. So these are all live charts. So as you can see, just literally follow the arrow, right? So having the right forecast is important. So if you're trading the upside, then good for you. You double your account, right? So now you have double your account or triple your account. This is something personal, some Singapore stocks. So these are all the live accounts for currency. Pound dollar, remember, is supposed to once it breaks out, looking for this push up. This one did not get to the high. Did not do an impulse correction and an impulse here. Instead, this actually came down. So on this break here, you're looking for one more up. But this is where the trade management comes in, meaning that the bias was upwards. But if something starts to go wrong, you need to be able to manage the trade as well. So having a bias is the first part, but then the next is the entry is important because getting at a good price ensures that you don't take a loss. You should never have taken a loss on this, right? Because after all, when it broke out of this trend line, that's when you're looking for the trade here. When it came back, again, depending on how the trade was managed, either was break even or some trade was some percentage in the basket was hit, how should I say? So let's say you took out 5%. Then the next day you take out another 5%, next day you take out 5%. So it really depends on how the person actually manages this upwards. But anyway, when this trend line was broken, you should have been looking for the buy. It did not get to the top. So worst case scenario, you got to take out for break even. Okay. Dollar CAD. Dollar CAD, you're looking for this pullback and this upwards, an upwards push. So you can see it did not come, this pullback did not happen here, but it actually happened here. See, so if I could move this line would be high up. That means once this correction is done, you're looking for this push up, this one more up push, right? This one more up push over here. So it's this push down and up is happening now, down and up. You're looking for that move. And of course, you need that confirmation of how to enter, how to actually create these buyers, right? That's important. So UJ, this UJ one, originally I actually thought this was coming down, but then when I saw some movement on the intraday, which is why the trade, the bias is one thing, but looking at how price moves here within this red candle is important because after that, when I actually saw what happened on a Wednesday, I reposted this and switched to the upside. Originally, I was thinking this side, something went wrong, then I switched immediately. See, bullish move up on Wednesday, right? So this was before Wednesday, and this was on Wednesday itself. I said, oh, that's wrong. That's wrong. And that was why this was happening. You see. So basically, I think if I can annotate it better, basically, it was over here actually. Yeah. So it was on this side. If you check it out, it's quite cool. Wait 1 second. Let me just annotate that one. So price action came down here, here. If this had pulled back slowly, this would have been the original idea where it would have kept going down. But this pierced up really sharp. And it kept going. And when this came out sideways, you know that this one, you're looking for the upside, right? So that's why this one shot up so high, because of this whole, because of actually this movement over here, because of this movement over here. This was the first indication, second, and then of course looking for this. Now this part itself was pretty hard to trade, because this is where people were getting stopped out over here. You see that? So if you did impulse correction, well, you would have taken a loss anywhere here, right? So, but the bias was actually up. So don't be mistaken that impulse correction will always work, right? So trading the bias would have stopped this. That means if you're taking this sell, well, you understand that it's against the bias. The bias was, you see this line over here? So this was one move, correction, and this move is going to be something. This was like this. This was a 1, this was a 2, and then this was 3, so sharp. And this is actually not that, all right? So the impulse correction, impulse idea has to be used in context with the entire bias itself. I mean, just because you see this and this does not always mean that, all right? Doesn't mean that at all. Yeah, okay, right. So next one was the York. So this one probably, well, okay, so down, bias was down, you can see, right? And look at all the live charts, as you can see. Everything is on point, right? Pretty, in the live chart here, everything is on point. Okay, crazy stuff, right? So these are all the live charts so far. These are all done on 60 and 240. And what I'm going to do right now is I thought I'll just analyze the chart today, see, let's go look at it. And let's do it all. This is all impromptu, so I'm just going to look at what's happening. Euro. So all the Euro news out today. Okay, in that case, right, let's go look at the Euro pairs. Euro pound, Euro and pound, right? Let's go look at those. So, okay, let's go look at the pound first. So generally, the charts that I drew already have they have a time factor of like about 5 to 10 days. You see, so often you need to wait for, when I say the time factor, it means that that see these big swings like that. In order to confirm this, you need a big swing. So all this has a huge time factor in play. Right? Sometimes there's just really no trade. There's no point in drawing something, and you keep coming back to the chart, but you could keep coming back, but it doesn't really mean much, because the swing, because when this comes down, doesn't mean that this was going to go up there, right? You has to do this, has to do this, has to do this, do that, do this, do that. The whole thing is a huge time factor over there, just to confirm, hey, you know what, I think it's kind of safe to take this, and this might go there. Maybe it might have gone there. Maybe. So if it doesn't get there, well, at least if I got in, at least I got until here. But, you didn't get the whole move, but you got at least some of the move, basically, So you aim for the stars, but you got the moon, so that's not so bad, right? So like this case, so you're aiming, you're hoping for this, right? Sometimes even that, but if you do not get that, well, at least you got a good entry, and at least you got something out of it, right? So swing trades tend to have that nature, okay? So now that you're over here, what to expect right now. My first thought process is this is a strong move. This is a strong move. This is one up like that. Now the problem with this move right now here is that this can be so many things. You know, it can be so many. It could be this, and then it could drop again to here, and then this strong move, and then it comes up like that. So these are all patterns that could potentially play out. So if I'm looking for a trade right now, right, then the most immediate trade would be waiting for this one to actually push up strong like this, sideways, and then go for one here. That would be the easiest one, and then hope that this line holds, and then you look for that move back down. And of course, from here you take profit. Why? Because you can also start study what currency strength is. Then if currency strength starts to do stuff like that, like this, like stuff like this, then you have to look for the buy. There may be no impulse correction impulse. This may not happen at all, because why? It's an impulse. We just push up straight. You will not have a big sideways here. This will not happen. All right. So as of now, the trade that I'm interested in is, of course, a strong push up, something easy like this, something strong push up, something easy, and then you can, break. Then you can try to look for the upside. So you're looking for something like this one. That would be the immediate trade. Okay, but once it gets out here, you're looking for the down. Right. Pound cat. I'll just look at pound and dollar and euro dollar. I think there's no point looking at too many pairs sometimes, Doesn't mean that you look at more pairs means you gotta make more money. You're losing more money as well sometimes. All right. Pound yen. Pound yen, okay. Subtrend. You already did a 1, 2, 3, like over here. So 1 second. Yeah, it already did a 1, a 2, and a 3. So if you're looking for this trade, right? If you're looking for a swing trade, it means you're gonna wait for something along those lines, like that. Then once that happens, then you see it pops above here, then that's where you try to go again. And if this one just keeps going up like this, then hard luck. It's gonna go off without you. See, if it just goes up like that, hard luck. There's no way you can enter here, because this could always just reverse. It's not. You always have this. It's always kind of better, right? So it's kind of better. So I would say right now, just have to wait for a proper pullback. Let me see. Something that comes back to touch any of these EMAs is always a good thing, right? Because you are in some kind of third wave. See, you're some kind of third wave going on. This was the first. This was the second. This is some kind of third wave. So anything like this comes back here, you're looking for the next push up. Means when price action is this is the first. This is the first, this is second, or let's say like this, first, second, and then this is the third. Always try to stay in the trend, right? Don't try to like first, second, third, and then from let's say like this, and then if you're looking for a sell here, you need to have a very good reason, maybe because it was something like that. That's why you thought this was impulse correction, impulse now. You need to have something valid here. But otherwise, the general rule of thumb, if it's third wave and you try to sell, and it goes up, you try to sell, it goes up, try to sell, this can keep pushing until the count goes bust. So in order to sell, you need to have a reason why. Maybe there's a strong move on this side. That's why you thought this was a flat and this was going down. Right? Otherwise, general rule of thumb is if you see it's a third wave, try not to go against it until you see something, even if it's like this, something strong, then like this, then there, you can try. So you're not trying to pick this top, because this one could always just keep going upwards, right? Okay, so like pound yen, you gotta wait for a pullback. Yeah. Let's go look at pound loss and see what's going on. Yeah, pound loss is always tricky. It's tricky. Doesn't mean that you cannot keep pushing. So, but let me see. Stuff like that requires us to study the currency strength. So I'm looking at the currency strength right now. Pound is kind of weak, but Aussie is even weaker. But I think by next week, right? Next week, if you see anything that resembles pound weakness, so you see anything like that, right? Like you see anything like this or like this, this is actually kind of good to take because this looks kind of nice actually, to be honest. Okay, it looks kind of nice. Now, just be aware that price action could always come here, and then yes, it can go up again. All this is possible, right? So in the end, this looks like this, and then it just drops and then it goes up. Right? It just takes out all this lows here and it shoots up. That's why over here is not a place of entry. You have to take it somewhere at the top so that there's enough room to breathe. Right? If you look at stuff like dollar yen, that's exactly the stuff that's exactly the stuff of nightmares over here. You see, dollar yen would be, yeah. I just know what makes you lose money because good trading. We need to know how to survive when we need to survive the bad things. Otherwise. If it's always making money all the time and we don't defend properly, then the money that we make will be lost very quickly as well. So stuff like that, you see. Just because you get this. See, that never happened. So this, it can also be like this, break this low, and then it still shoot up. Right? See it here, remember this. This is where impulse correction impulse doesn't work, all right? So pound Aus, like over here. So that's why we look at pound Aus. Same thing, I'm going to emphasize the same thing, something like that. So you come here, just be aware that this, like dollar yen, could also shoot up like that. So you want to enter at the best price and then trade it. Because if it does not do that, well, your account just triple. Okay, so that's the idea. And let's go look at gold. Gold's all-time high. So for those who said that they should sell gold, well, I think some people were saying, what are they saying? They were saying stuff like, I don't know, like, like that maybe, like maybe this, and then this was going to come down, and what did they say? Like this. No, that's why it's very important. I know this is a strong move. I know that you like that and then you like that, but that all requires confirmation. So whenever you have a third wave, first, second, third, remember what I said, always stay in it as long as you can. First, second, third. First, second, even how deep, third. Try to stay as long as you can, because there is no guarantee why this should come down. This move requires confirmation. It's not so easy that it's not always. Again, I emphasize, not always the case. All right. Go. Let's go look at oil. Some people trade oil. Oil was very interesting because oil did a very, very strange pattern right here. I never seen this before, but I'm not oil. I don't trade oil, but I thought this was quite interesting. It did that, so this actually ended up being something like that. You see, you got 1, a 2, and then a 3 just straight down. So the idea, of course, you're looking for oil to go up actually. If it forms a pattern like this, simple pattern like this, and then this looks strong, then of course this and this will be a 1, a 2, and a 3. And then once you get that, if you think this is a 3, 1, 2, 3, and it clears this top, you get something like this. But don't forget, you have this one. So if you see something that says, hey, you know what, I think this will go down, maybe it might form a 1, 2, 3 like that, possible. But always be aware that if this happens to be all the correction, this is all. Let's say this all the correction over here. All right, let me just shift that. Okay, I don't know. Let me just not use that. Let me just try. This is all the correction, and this is move up like this. If this is this, if this is that, this can be the first wave. This could be the second wave. This can be third as well. Then the trend line will go on this way. This is actually the move that's going to break the stop. So it is quite tricky. So when this one comes up here, this might continue up. It might retrace to go up. It could come here and then it breaks down sharp and then it comes down, breaks this low. Whatever happens here is it's beyond. There's no use to forecast that far because we don't know what's going to happen here. But right now, what you can see is something like this. And this looks like the most obvious one. So you look like this looks like it might come up here. It's true. Then it might fall down. It might fall down there, just like pound dollar, just like pound dollar. See that? If you look at pound dollar, sorry. If you look at pound dollar, just look at pound dollar. So you see what happens. It just came here. So you thought in this case it went up, but it did not continue. Instead, it just here 1, 2, and then it collapsed. So when I come back to oil, well, we do like the upside, but just remember, it depends on how this one goes. You need to know how to effectively manage this trade to the upside. So if you there are many ways to do this. You could try using some moving averages, right? So long as this one comes up here, comes here, pulls back, comes here, you just take a profit. But at any point in time, this could happen before it actually goes like that again. Right? So this is everyone has got their own trade management style. So what I'm trying to give is just a forecast, right? So actual trading is something else altogether, right? Let's go back to the daily again. So right now, upside is a good idea because this pattern looks promising, right? And this one does look nice. So even though this is what we hope for, but remember this could just be like this, and then this could also drop, making like a A, a B, and then a C move like this. 1, 2, 3, and then there's a 1, 2, 3. So if you see that this is kind of struggling like this, don't try to aim for the sky, right? Always take one profit off because it's ambiguous, right? It's ambiguous, and the trick to making money with ambiguous trades is to have very good entries. So it comes here like this. This is a good entry to get up to there. All right, or once it comes up to there, then here it goes. So you just take some profit along the way. Don't keep it to the top because again, this is what you hope for, but you got to understand that this can also happen. All right, so you got to intraday trade the whole thing. It's ambiguous, right, from a technical perspective. If you look at currency strength, can also give a good indication on the day exactly how to trade it. Right? Currency strength, so you can go Google about that. Okay, so I guess that's enough here. Thanks for listening, and I hope it helps.